Okay, so in our last session, I discussed preparation of trial balance, right? So in the prime entry books chapter, we have covered the source documents, preparation of the basic prime entry books, the cash receipt journal, cash payment journal, then the purchases, sales, return inward and return outward journals, the petty cash book, and the general journal, right? Then we did bank reconciliation statement, then the error corrections, then we started trial balance. Right, so I have covered some of the basic questions from the trial balance. So today we will do a question to cover the entire process. Right, so this is the question. Kudabanda started a business as Little Mod Traders on 1st of April 2012, investing 300,000 rupees in cash. On this day, he purchased an office equipment from furniture house on credit terms amounting to 100,000 for the use of the business. Little Mod Traders does not maintain a bank account. So no bank account, only cash. Following transactions were recorded during the month of April 2012. Credit purchases from Nautilus Shop, Baby Needs, and again from Nautilus Shop. The value of goods returned to Nautilus Shop. So this is goods return outwards. The purchase was returned. Value of trade purchases on cash was 75,000, incurring a transport cost of 5,000. So this is a carriage inwards. Credit sales, S Limited, Worth Company, Moon and Brothers. Salaries paid to staff, 25th April, 150,000. Cash sales, 60,000. Payment to suppliers, Baby Needs and Nautilus Shop, 150 and 122. Receipt from customers, S Limited and Worth Company. Then we also have cost of goods taken by Kudabanda for his personal use. So this is drawings, 15,000. Monthly rental of the building, 20,000 was paid on 30th April 2012. Inventories have been valued at 110,000. This is the closing inventory. Then we have unpaid telephone and electricity bill. This is accrual. Depreciation, 12%. This is not an A-level paper. This is from double A-level papers. It's a mixed question. So once we understand the basic stuff, we will cover the A-level papers. Already I have done some of the papers. So in the end of all these questions, once we understand everything, we will cover all the papers in A-level past paper. Right? Okay, this is from 2012 July AAT past paper. Okay, right. So from this you can cover the entire accounting process. Entire process can be covered. Right. So what you need is the ledger accounts, the relevant ledger accounts, trial balance, trading profit and loss account, and also let's prepare the statement of financial position, complete set of accounts. Right. We will start with on the ledger account. We will start with the prime entry books. Okay, so we need a cash receipt journal, cash payment journal, and also let's prepare Purchases journal, purchases return journal, sales journal, there's no sales return. So initially we'll start with the prime entry book. So I want you to draw the prime entry books relevant for this. Okay. So draw a cash receipt journal, cash payment journal, sales purchases, so first, let's do the prime entry books. Prime entry books. So here's the format. Prime entry books. Draw the formats for prime entry books. Cash receipt, cash payment, purchases, sales, return outwards, and return inwards. There is no return inward, but I took it as the format. So this is a very good question to cover the complete process. So in the accounting process, the first step is before recording into the ledger accounts, we initially record them in the prime entry books. Initially, we record them in the prime entry books. Okay. So first, let's record the transactions in the prime entry books. Prime entry books. Banda started the business as Little More Then, on this day, he purchased office equipment from furniture house on credit terms amounting to 100,000 for the use of the business. So this is a credit purchase of fixed asset. So when we purchase fixed asset on credit, which prime entry book do we record it? We have to record them in general journal. So I want you to draw a general journal as well. General journal. General journal. So the date is 1st of April. 1st of April. Credit purchase of office equipment, double entry is office equipment debit. Then the furniture supplier, furniture house, furniture house is a creditor. Other payments. Other payments. 100,000. Debit and credit. Recording the purchase of recording the credit purchase of office equipment. Okay, so that is credit purchase of office equipment, which will be recorded in the general journal. General journal, right? So you need to understand where to record each transaction, which prime entry book do we need to record the transactions, right? Okay, so next, does not maintain bank account. Following transactions were recorded during the month of April 2012. Credit purchases for purpose of resale. These are credit purchases. So these will be recorded in the purchases journal. Purchases journal. 3rd April, supplier, notless shop, 100,000. 6th of April, baby needs 200,000, and gain 13th of April from notless shop, another 100,000. Then you calculate the total, 400. Then there is a return. The value of the goods returned to notless shop on 10th of April. It's a return outwards. 30,000. So closing balance is 30,000. Then there is a third transaction. The value of trade purchases on cash on 16th of April, 75,000, incurring a transport cost of 5,000. So this is a cash payment. 16th of April. Purchases 75,000, and there is a transport cost. So this transport cost is actually carriage inwards. Carriage inwards, it's 5,000. So purchases, we take it under cash purchases. Carriage inwards, we can take it under expenses. Same day. Transport cost for purchases is called carriage inwards. Then we have credit purchases, credit sales, sales journal. 5th of April, guest limited, 250,000. 9th of April, birth company, 200,000. 20th April, Moon and Brothers. Moon and Brothers, 210,000. So total will be 660. Total is 660. So the next transaction, salaries paid 150,000, 25th April, salaries 150,000, which is an expense. Salaries paid 150,000, which is an expense. Then cash sales 60,000, which will be recorded in the cash received journal. So since they are not given the date, we'll take the closing date, sales 60,000 under cash sales. Right. Now we have payment to suppliers, 22nd April. Paid baby needs 150. Actually, you can write it according to the dates, okay? 28th April, plus shop 122. These are payment to creditors. There is no discount. 150,000 is paid to baby needs. 122,000 paid to Nautilus shop. Received from customers during the month of April. 15th, guest limited 150. 26th April, Worth Company. Worth Company 180. So both categorize under debtors column. Right. So hope it's clear. If you have anything, let me know. I can explain. Cost of goods taken by Kudabanda for his personal use. Where do you record this? This is drawings. Which prime entry book do you record stock drawings? Tell me. Which prime entry book do you record the stock drawings? Cash movement. General journal. Yes, it is recorded in the general journal. Okay. 28th April. take it under general journal. Stock drawings. Double entry for stock drawings is drawings account debit, purchasers account or cost of sales account. In the trading account will be credit. Recording the stock drawings by the owner. So that is double entry for stock drawings. Value is 15,000. Value is 15,000. Right. Then the next adjustment. Monthly rental for the building amounting to 20,000 was paid on 30th April. So this was paid 30th April. If we have paid, which is recorded in the cash payment journal. Paid. Building rent. Building rent. 20,000. It's an expense. Building rent. Number 11, the inventories have been valued at 110,000 as at 30th April. So that's the closing stock. Closing stock also will be recorded in the general journal. General journal. So closing stock value is 110,000, 30th April. 30th April. Double entry for the closing inventory. Inventory account debit. Inventory account debit. Cost of sales credit. Cost of sales credit. 110,000. Adjusting the closing inventory in the books. Adjusting the closing inventory in the books. 30th April. Then we have unpaid telephone and electricity bill for the month of April 2012 for 6,000 and 8,000 respectively. So these are payables, accrual. So accrual adjustment also we can record in the general journal. Electricity, telephone is 6,000, electricity is 8,000. Telephone expense, account debit, accrued telephone, account credit. Adjusting telephone 6,000 and 8,000. Electricity is 8,000. This is 6,000. Electricity is 8,000. Electricity expense account debit, accrued electricity account credit. Accrued electricity bill. For the month of April. So that's the double entry for accrued expenses, telephone and electricity. Then finally we have depreciation on office equipment provided at 12% per annum. Depreciation 12% office equipment. Right, so there was an office equipment which is purchased at the beginning 100,000. Right, the credit purchase of office equipment was there 100,000. This one. Let's calculate the depreciation. How much is the depreciation? Can you all tell me? How much is the depreciation? Double entry for depreciation is depreciation account debit, provision for depreciation account credit. Tell me how much is the Oh, 12,000. 12,000. No, it's not 12,000. It's not 12,000. Depreciation account debit, provision for depreciation account credit. So depreciation is calculated 100,000 into, so they have said 12%, right? 12%. Yeah. So we are preparing this only for 1 month. So multiply by 1 over 12. So 100 into 0.2 divide by 12. It's only 1,000. Only 1,000. Depreciation account debit, provision for depreciation account debit. This is office equipment. Office equipment provision for depreciation. Right, so you need to carefully read the question. It's not 12,000 or 1,200, it is only 1,000 because we are preparing this only for 1 month. The depreciation rate 12% is given per annum. Since we are preparing only for 1 month, you have to calculate, or you have to divide the depreciation by 12. Okay. So that completes the prime entry books. Prime entry books. Any questions up to now? This is a very good question because it covers the entire process. Now calculate the total balances in the cash receipt journal, payment journal. Right. Per annum means per year. Per annum is per year. Per annum means per year. Biannual means 6 months. Quarter. Quarter means 3 months. Right. So in some questions we will have, they will say sometimes per annum, biannual, quarterly. Per annum is year, biannual means 6 months, quarter means 3 months. Right, then if you need okay. Fine. Now let's prepare the ledger accounts. Ledger accounts. We need a cash control account, capital account, debtors control account, sales account. Carriage inwards, salaries, building rent, creditors control account, purchases account. So I'm highlighting the ledger accounts that we need for this question. Okay. Then we need sales and purchases already there. We need a return outward channel, return outward account. Okay. So let's draw the ledger accounts for the question. General ledger. Cash control account. Sales account, purchases account, capital account, can I convert salaries building rent? So the return outwards from inwards. So these are the ledger accounts that we need in general ledger. In the general ledger. This is before the general journal, the transactions. Okay, right. Now we will record these transactions in the ledger accounts. So first I'm going to record these transactions in the general ledger. Starting with cash receipt journal. Cash control account, there is no opening balance because this was started in the current year. Then the capital invested by the owner is 300, cash account debit, capital account credit 300. Cash account debit, capital account credit. Right. Okay, before the cash, let me record the purchases, sales, and returns. Then it will be easy. Purchases. There is no balance in the debtors and creditors accounts. Zero balance. So first we'll record the purchases. Purchases account debit. Creditors account credit. The total purchases is 400. 400 purchases account debit. Creditors control account credit. Purchases. Then there is a return outwards of 30. That is debited to creditors control account. Return outwards 30 and return outwards account credit 30. creditors control account debit, return outwards account credit 30. Sales, credit sales. Debtors account debit 660, sales account credit debtors 660. Sales account credit, debtors account debit. Okay, now we will check the other balances in the cash receipt journal. We put the capital, then we have debtors, cash received from debtors, cash account debit 330, debtors control account credit 330, cash account debit 330, debtors control account credit 330. Cash sales, cash account debit 60, sales account credit 60. So in the sales account, there will be credit sales plus cash sales. So those are the cash receipts. If you check the total is 690. All the cash receipts. Then if we check the payments, the cash payments, there is 5,000 carriage inwards. 5,000 cash account credit, carriage inwards account debit 5,000. 150 salaries. Salaries 150. Cash account credit, salaries account debit 150. Cash account credit, salaries account debit 150. Building rent, cash account credit, building rent 20. Building rent account debit 20. Paid to creditors, cash account credit 272. Creditors account debit 272. Cash account credit, creditors account debit 272. Purchases, cash purchases, cash account credit 75. Purchases account debit 75. Right, so that completes the recording the transaction from day books, cash receipt and payment journal. And if we balance the cash book, total cash receipt 690, 168 is the balance portfolio. Debtors and creditors also we can balance it. Debtors balance is 330. Creditors balance is 98. Then take the sales. Sales and purchases, we transfer the difference into income statement. So, capital, income expenses, we have to transfer to the income statement difference. Salaries, building, maintenance, return of. assets, liabilities, capital, we transfer to the statement of financial position, these balances. Right? So this is how you prepare the general ledger accounts, the control accounts. From the prime entry books, we transfer using the double entry principle, we transfer to the general ledger accounts, T accounts. Any question? This is the method. Right? Even a very complex method, this is the basic. Right? It's a small question, but it covers everything. Right. Now, from the general journal, I'll take the transactions. Purchase of office equipment, double entry, office equipment account debit, debit 100, other creditors, furniture house, credit, so you need to remember, you need to understand creditors control account is trade creditors. So trade creditor is different from any other creditors. Trade creditor means what you purchase for resale purpose. Your inventory, if you purchase stock from on credit, then those creditors are called trade creditors. For them only we prepare the creditors control account. So this one, office equipment, it is purchasing a non-current asset, purchasing a fixed asset on credit. So we can't record them in the creditors control account. You have to show it as a separate creditor. Right? All right. Then this is done. The cost of sales related parts we can do in preparing the financial statement. So I'll keep that. These two transactions I'll keep it. The cost of sales we have to calculate in the trading account and preparing the trading account. Right? So let's keep that. We'll do the remaining transactions. Telephone expense, accrued telephone. Electricity expense, accrued electricity. Office equipment depreciation account, office equipment provision for depreciation account. So you need 6 ledger accounts to record these transactions. Okay, then you can balance those transactions. So I'm not going to do that part. I will prepare the trial balance now. So for the trial balance, I'll take these closing balances. Okay, so let's prepare a trial balance. Trial balance. So for the trial balance, we need to take all the closing balances from our ledger accounts. Cash debit balance 168. Debtors 330. Creditors 98. Sales 720. Purchases 475. Capital 300. Return outwards 30. Carriage inwards 5000. Salaries 150. Salaries 150. Building rent 20. Office equipment 100. Other creditors furniture house 100. Then there are 6 more transactions. These, when you record these transactions, it's getting balance. Now we need to record these 6 transactions. So I didn't prepare the ledger account. I can directly take the expenses, the balances. Telephone expense 6,000 debit. Account telephone 6,000. Electricity expense 8,000. Accrued electricity credit 8,000. Office equipment depreciation 1,000. Provision for depreciation is 1,000. So you can complete this trial balance. right? So when you prepare these 6 ledger accounts, if you prepare the same account, there will be only one transaction, so that will come here. Right. Now let's prepare the income statement and statement of financial position. Okay, so we have these balances from the trial balance. Let's prepare the income statement and statement of financial position. So we draw a format here. Right. Income statement and statement of financial position. You can draw this. Income statement and statement of financial position. Then you have to start with these two adjustments. The adjustments which we didn't do for cost of sales. So you can start with those two. There is a stock drawings and the closing inventory. Closing stock double entry is cost of sales 110,000 minus and current asset inventories 110. I cannot complete it. I'll give 5 minutes. Try to do this. There is a question. Why don't we put drawings account in the trial balance? I didn't do the stock drawings because I'm going to do these two adjustments when preparing the income statement and SFP, when preparing the final accounts. That is why I didn't do this entire double entries. Because if I am doing this, I have to have the cost of sales. So cost of sales calculation we are doing in the income statement. That is why I didn't record these two. I didn't take these two into the trial balance. I'm taking that in the trial balance without purchases. I have to take the cost of sales. That's the reason. Okay. So this is stock drawings. Okay. Stock drawings double entry. Cost of sales will be credit. Stock drawings. minus 15,000, and drawings account debit, so that will be deducted from the equity stock drawings. So those are the two adjustments, right? So before we record the transactions, we have to do the adjustments, right? So adjustments, we have to record the double entries, two places. Remember, all the adjustments we have to record in two places, and trial balance, the amounts in the trial balance, we have to record only in one place, only in one place. Right. So we have now adjustment is done. Remaining transactions or the balances from the trial balance we have to take to the financial statements. Cash 168, debtors 330. Debtors is current asset. Creditors 98, which is current liability. Sales 720. There is no opening stock. Purchases 475. Purchases 475. Capital 300. Return outwards, that is deducted from the purchases. Return outwards 30. Current inwards will be added to purchases. Salaries 150. Building rent 20. Office equipment is we can do this financial position in 3 columns. Office equipment is 100. Telephone expense is 6,000. Accrued telephone expense is 6,000. Electricity expense is 8,000. Accrued electricity is 8,000. Depreciation is 1,000. Accumulated depreciation is 1,000. Net profit is 210,000. So it's getting balanced for 707,000. So we started with prime entry books, then trial balance. Income statement, statement of financial position. There's a question. That means we don't put goods drawings account in the trial balance if they haven't put cost of sales in the trial balance. Yes. If the cost of sales is not in the trial balance, that means goods drawings and the closing stock adjustment is not done. If they have done the closing stock adjustment, you can't have the purchases, you will have the cost of sales. These 25 will be there. Okay. Even these adjustments, without having in the trial balance, you can do in the financial statements, these six accounts. So if you don't record these six accounts also, the trial balance will get tallied. And these adjustments, there are three adjustments: accrued expenses, accrued electricity, accrued telephone, and depreciation. These adjustments also you can do in the when preparing the financial statement. there is a question. So what if we had discount allowed and discount received? So discount allowed, discount received will come to trial balance because that will be adjusted in the general ledger. In general ledger, we will adjust. Debtors account will be credited, discount allowed will be debited. Discount received will be credited and creditors control account will be debited. Then that will come under income statement. Discount received is other income, discount allowed is expense. Cash and credit should be. Cash discount, yes, we adjust. We have two types of discounts, trade discounts and cash discounts. Only the cash discounts will be adjusted into the accounts. The amounts which come to the cash receipt and payment journal. Right. Not over. We have another part to do. We did only the general ledger. Right? Let's do the sub ledgers. Right. So this is the general ledger. Now we can also do the sub ledger. Right. So let's do the sub ledgers. Subledger means the individual account. So when we do the control accounts, I was explaining the subledger, debtors ledger and creditors ledger. So shall we draw? Okay. We need two suppliers, not plus shop and baby needs, and three customers, guest limited and work company, and Moon and brothers. Okay, so let's do that as well. The subledgers. Okay, draw the subledgers. Take the format. So first let's draw the creditors. We have two suppliers, not plus and baby needs. Interesting. Then we have debtors loop. There are three customers. Guest limited, work company, moon and others. Okay. So let's do the creditors individual accounts. Creditors individual accounts. There is no opening balance. Debtors also no opening balance. In purchases, not plus shop 100, and there is another purchase 100. Baby needs purchases 200, and there is a return outwards for not plus shop 30. This is from the purchases journal and the return outwards journal. The debtors also let's record sales. Guest limited 250. Work company sales 200. Moon and brothers sales 200. There is no return. Then the cash transactions. Creditors. Paid to baby needs 150. Paid not less of 122. Cash paid to not less of 122. Baby needs cash paid is 150. These two transactions. Creditors and debtors. Guest limited 150. Work company 180. $150. Work company 180. That's it. So let's calculate the closing balance. Calculate the closing balances. Not plus shop, closing balance is 48. Baby needs purchase 200 and cash paid 150, therefore closing balance is 50. Debtors. Guest limited balance is 100. Work company balance is 20. Moon and Brothers there is no transaction other than the sales. So the balance is 210. 210. So this is creditors ledger and this is debtors ledger. Now if you prepare the debtors and creditors list, because we need to check this with the control account. Not plus shop and maybe needs. Guest limited, work company, Moon. 48 and 50, 100, 20, 210. So creditors list total should be 90. So if you check the creditors control account, uh, uh, 300, yeah, 98, sorry, 98 and 330. So here you can see 98 creditors, 330 debtors. Okay, so this is how you prepare the sub ledger. Now we covered everything from this question. From preparing prime entry books, to general journal, general ledger, sub-ledger, trial balance, income statement, statement of financial position. Complete question. So before you move on to anything, you need to have an overall picture about the process, what you are going to do. Then only it will be easy. Right? So that's why even it took almost 2 hours, but I hope this knowledge will be useful. Understanding this is very important because the next few sessions, if you take the syllabus, we have the final accounts for sole proprietorship, partnership, companies, non-profit organization, income tax records, everything. You need to have this overall picture about the process. So that is why even it took more time. Uh, I wanted to explain this question. Any doubts? Is it clear? So this is the complete process. So give you a feedback. So then only I can, based on your feedback, I can focus on some special areas. Or if you want to develop anything or your suggestions, everything can be, I can think about it. Okay. Like any other questions? Completely. This is generally. It's 590 minutes. Trial balance and financial statement.